Welcome to our Midweek Forex forecast. My name is Jay Norris. As always, we need to remind you, trading Forex is a risky endeavor and not suitable for all investors. I've written a couple of books on trading which were published by McGraw-Hill and also serve as textbooks for our courses. And I'm also the Director of Education at Trading University. Let's get right to the charts. First market we're looking at is the Australian US dollar. You know, I've been bulled up on the Australian dollar for some time now. It's pretty simple. When you have these three all-important patterns aligned, the primary, the secondary, the day-to-day, from our perspective, the best thing to do is hunker down and buy dips. You want to buy dips in line with these important patterns. It looks like this market is now in a position to take out that longer-term resistance line. We think you've got a shot at 108. We think you have an outside shot at new highs for the year, in fact. If they get much beyond 106, we think 108 is in sight. X market, the euro US dollar. I almost wish I could come back to the euro because my analysis really for the euro is going to be strongly influenced by the other markets, such as the Australian dollar I was just looking at. If you see the strong Australian dollar, if you see the Aussie get above 106, you may just pull this market higher too. Yes, I know the primary pattern is down. Yes, I know from a longer-term position trader's perspective, you're in an area of the chart where you would be looking for a sell setup. However, I'd be a little bit concerned about blowing buy stops above 31 3/4, 132 even. Here's one where I do think you have an outside shot at gunning for those stops, and then you may just see a runaway rally over the holidays as they scorched the shorts, as they ran shorts out of this market. We'll come back to the euro after we analyze a couple other markets. Here's dollar yen. Dollar yen is looking strong. Here's another one. We have all these important patterns up. We finally designated our short-term primaries up. So dollar yen has shifted to short-term primary. That's a big deal, people. The secondary was up. No question about that. The day-to-day is up. So again, you've got some pretty important patterns aligned here in this market. Same story we were saying with the euro when you have those, the Aussie. Same story we were saying with the Aussie. When you have those important patterns higher, what you're going to do is look to buy dips. So by all means, we're looking to buy dips in dollar yen, and we'll just have to see if it gives us some kind of retrace. It's a very strong market. It looks like it's cupping higher here already. You see it on the 4-hour. So, you can't rule out another leg up. And if you got another leg up in dollar yen, that's going to be supportive of the euro itself. I know that seems counterintuitive, that dollar yen, long dollar yen, would actually be friendly for long euro dollar, right? However, when dollar yen is moving along with the majors, in other words, all the yen pairs are moving along with the majors and moving along with the stock market, that's a pretty bullish development. We haven't seen that development in some time, okay? So stick with me here. A bullish dollar yen will be supportive of a euro US dollar. And this is going to tie it all together. Here's your U.S. stock market. This is the previous alpha market until the yen pairs usurped. So the yen pairs are currently leading on the upside, although the U.S. stock market woke up big time today. Stocks broke above that resistance level, and you can see they're charging. You shifted that day-to-day higher. Let me go to a daily chart. There you go. You see that familiar pattern, primary up, secondary up, day-to-day up. You don't want to be short in that environment. In fact, you want to be buying dips or you want to be hanging on to longs, just like today. So I'm pretty bulled up on this market also. And you just saw Aussie dollar, bull market, dollar yen, new bull market, U.S. stock market, old bull market, but they're making headway on the upside. So when you see the economic environment we're in and you go back to the euro, you start thinking, well, if this guy plays follow the leader at all, then it's easy to make a case for blowing stops above 131 3/4, 132 or so, and then we could see higher prices here. Longer term, we'd love to entertain sell setups against that longer term resistance up above. I haven't even put those levels on the chart yet where we would entertain that, but for now we have to wait and see if it makes a higher high and guns for those stops. So this is a pretty interesting situation. You could see a big rally over the holidays if they do gun for that high, and it would be supported by the unfolding patterns in the asset class markets. And keep in mind, euro, by the way, is a carry trade. It has that 0.75% interest on it. Now that doesn't sound like a lot, but at 50 to 1, that's that's a decent little carry there too. So keep in mind that would be supportive too. In other words, the shorts on this trade have to pay that carry. So you want to keep that in mind as far as longer term traders. Hedge funds, they may be feeling a little bit of pinch just from having to pay that little carry on there too. Thank you so much. Again, I am the director at Trading University. Come and see our site. You can click on market commentary and see some of the timely articles we've written and some of the videos that we've done.